All right, what is going on, everyone? Welcome back to the channel. It's been a while. My name is Gerardo with LookIntoHex.com. I missed making videos for you guys, but today we're going to talk about HEX and more specifically look at whether it has double bottomed, whether we could have completed or be in the midst of completing a wave 4 in a macro 5-wave impulse pattern. We'll touch on all of our favorite risk metrics from LookIntoHex.com and we will call it a video. So first of all, it's been probably over a month since I've actually made a pre-recorded video. I tend to like making live videos more, but we're gonna mix it up again and start making videos how we started the channel. So let's get right into it and let's look into these metrics. What I'm contemplating here is whether I want to call this a double bottom or not, or whether it's too soon. Now, honestly, I think you can call it one, right? Because what's the actual percentage difference between this wick and this wick? 6.35%. So of course we can go lower, and technically you could call this a double bottom within a range, right? Let's actually get a box going, a rectangle here. So you could really say there's a range in which, we could land anywhere in there and still call it a double bottom because we want to give it a bit of margin. There is margin within double bottoms. So we're talking about the wick we had of 14.5 cents a couple weeks ago and the wick we had today to 15.3 cents. Now, technically a double bottom, sure, that's interesting, but what's more interesting to me is if you look at our regression rainbow. So I'm going to pull up on TradingView our custom regression rainbow indicator to show you where price went today. This is a log chart. Price wicked down to red identically. Now red was sitting at 15.6 cents before the daily close, and we wicked down to 15.6 cents. Today it's at 15.9 cents, and it goes up by about a third of a penny every day, right? Very cool. This is constantly rising. Can it break? Yes. I actually made a VIP video yesterday explaining how the red support line is really a line of best fit. It's not to say we can't go beneath it, ride beneath it for a few days, actually close candles beneath it. 1, 2. We see here almost a week of candle data. And if you scroll back previously when the market was more volatile, we had 2 or 3 candles close here, a couple here as well. But this is just to show you that there is margin. Look at this candle here. It wicked down almost identically to it. These wicked beneath it. And again, so on. Some of these don't exactly touch. Some of them go a little farther. All that means is it's a line of best fit. For example, here we almost wicked to it. I would consider that a touch point just because within striking distance, this is clearly a touch point. But just to point out that we can go beneath it, for example, we could ride it just like we did back here. If we were to see some sort of flat kind of reaccumulation, distribution, bottoming formation, that'd be interesting, right? Because we've seen it before. Now, if you're observant, you can probably tell that there's a fractal pattern that is playing out. You can call this pattern whatever you want. I don't think that matters as much. I think what matters more is just the shape of the pattern itself. And again, if you have the technical term for this, feel free to leave it in the comments. You could call this an ABC. Again, it doesn't really matter what it's called, but rather the fact that it's in the charts. Now I'm going to point it out here like this because that's really looking at a line chart. Let's get rid of this regression rainbow for a second and switch to a line chart, hide the drawing tools, just to give you an idea, right? Of the double bottom, aka ABC correction, whatever you want to call it. This double bottom formation, we saw it back here. Where else did we see it? I mean, you could argue we saw it here. That's like kind of a stretch. But more or less, we end up at a double bottom many times, right? Over here as well. Over here. Let me point this one out. This was earlier this year, starting at January this year, and it ended pretty much in February. Again, a similar formation. There's a tiny version of the same thing over here. these aren't a stretch. I'd actually found these before the video, right? And if you look at where we are now, it looks eerily similar, right? It seems to be that Hex likes to make this pattern. And notice that we've seen it signify the bottom. And I don't know how many times I've said bottom in this video already, but you know, it can't be much clearer than this. That's not to say we can't go down lower. For example, we have had situations where that doesn't happen. For example, here, you could call this more of a triple bottom. I know there was a bullish divergence here. It's kind of unique, sure. Right? We can have different formations, but for the most part, yeah, we like to have these sort of ABC looking formations. So that's bullish, right? That tells you you could be close to the bottom. I'm bullish on the fact that this sort of fractal characteristic shape, whatever you want to call it, coincides with the fact that we hit on the regression rainbow red identically, right? I was on that chart with our wick, not with candles, but with our wick. So we have convergence of indicators. We have our fractal shape. We have hitting this red support line, which historically speaking has been obviously phenomenal local entry point. Like, not only are you obviously profitable in the macro, but in retrospect, you were profitable damn near immediately. All right. We even saw with this wick, anyone who bought this, technically still in profit, right? So the opportunities that we get to buy Hex in this red zone are few, and they're here. They're here now. Call it a Black Friday discount, whatever. But back here was basically Q1 of 2020. We didn't get those opportunities again until more or less Q1 of 2021 on average. Obviously, there was a little bit before and a little after. And now it's looking like potentially, you know, end of Q4 or early Q1 next year. So we're getting some seasonality to this chart now that it's almost 2 years old, that tend to have these bottoms in, you know, January over here. We saw this bottom in November. So sort of end of the year, right? November, December, January, we like to have a bottom, I guess. Again, we need to see Hex evolve for more years to actually be able to give some definitive seasonality to it, right? The more data points you have in statistics, the better to make your thesis. So not only that, right? That little fractal we spoke of is not only found in the price chart, but obviously in metrics derived from price itself. One of those being our heat maps. Now, you can look at the heat maps with color, which is really nice. For example, like this. And you can also take the color out of it and just see it as an actual scale. And I'm going to pull that up shortly, but you can see that we did cool off a lot. We went from this green region where we've seen tops before, over here as well. Here was pretty overheated, right? When we actually hit pink for that one time. But currently we cooled off to orange, which we've cooled down to that before continuing to rally. We've obviously cooled down even harder into this red zone, but we are close to basically all-time low. But what's really interesting to me is not the absolute value of this risk metric, but rather it's the characteristic shape of what we just talked about, and that's the double bottom, this W formation. If you've been staring at this chart that I'm showing you here, you may have noticed by now, but let me actually pull it up somewhere where you can see it a bit cleaner. And that is here on TradingView, right? We have our risk metric here as well. Now on TradingView, it's nice. What is nice is that you can have a filter top, and I choose that here at 0.8. You can have a filter bottom, and I choose it at 0.2. Reason being, just look at the chart, right? Once we actually crossed beneath this 0.8 filter top, it was May 14th of 2020. That was the literal top of Hex for locally speaking for, you know, almost 6 months. A little telling. So that's why we use this risk metric. Not only that, conversely speaking, it tends to capture this interesting pattern that we've seen on bottoming formations. It's this, the sort of W formation. Once, twice, and again in statistics, we like multiple data points. 3 times we've seen this pattern, and currently we are forming something like this, which if it rebounded, lo and behold, it would be very similar. Now, we can touch on the details, right? For example, W-ish, double bottom-ish, where this was actually a higher low, but we call it a double bottom. Over here was actually a lower low, call it a double bottom, higher low, lower low. What's interesting is they don't necessarily need to correspond to the same characteristics in price. So, for example, when we saw this low on the risk metric, August 20 of 2020, price was at, 0.0028. And then we saw a higher low on the risk metric, but price actually saw a lower low, 0.022. So we can see it in both directions. Similarly, on big payday, the risk metric, we had a lower low, but price was a higher low by about 10%. I checked a few times already. I'm not going to do it again. So what's interesting there is that we're seeing the same thing play out now as we saw after big payday, where we see a lower low on the risk metric, right? This low was at 0.16. This one was at 0.14. And we actually see a higher low in price, right? This wick was 14.5 cents and today's wick was about 15.5 cents. So this here looks very similar to after big payday. The main difference being big payday dip was much more violent, much quicker. And what I mean by that, I mean it happened over the course of just like 3 weeks, and it was an 86% dip. Whereas the current dip we're seeing took about, if we talk from local top to local bottom, September to November, 2 months, right? So versus 3 weeks, what is that like? Like almost 3 times as long. So the dip was 3 times as long, and it wasn't as deep, right? We only saw 74.5% dip versus an 86.5% dip. So it's different, but similar, right? We can actually overlay this bars pattern. Oh, that's the wrong day range, excuse me. To just show you exactly what I'm talking about, right? If you overlay at the very top, you can see that if something similar had happened, we would have seen the dip happen way quicker and it would have been way more violent. But the fact that it played out like this, hopefully the fact that it took so long means this was the bottom and we don't see it dip as much as it would have if it played out exactly like after big payday. So, I mean, it's playing out the characteristic shape, like I said, double bottom on red. Look at that, double bottom on red. I mean, it's hard to call the bottom, I'll admit, but a lot of indicators are converging here, right? It reminds me of this period in time when I just started making videos, and I said, look, we're hitting red. It might be go time. Not only that, it was great horizontal support. I'm feeling April vibes, guys. Look at that. Horizontal support. You know HEX loves its horizontal support. If you're new, let me illustrate. Let's get rid of literally everything just to illustrate a few key horizontal supports, horizontal support levels in HEX's history. 60% of a penny, 1.5 pennies, about 7, the 10 region, 10, 11 region, and this current region we're in, right? So you can see the number of touch points. HEX respects these horizontal levels. 1, 2, you could argue this wanted to wick to it. We bounced off of it here, got rejected here, formed an indecision here that actually launched us off. Support, support. How many touch points is that? 1, 2, 3, 4, 5, 6, 7, arguably 8. And on this 1.5 cent level, 1, 2, 3, nice bounce here, 4, support 5, right? So only reason I'm saying that is the following. This currently reminds me of that, right? What I'm saying is right here at this point in time, we had horizontal support and we had regression rainbow support on red. Currently, it looks like we want to have horizontal support and regression rainbow support on red, meaning this could be an opportunity that we haven't seen since 7 months ago in terms of how clear of a signal it is. So these don't come every day. Clearly, it's been 7 months. What happened after that? Obviously, we had our rally, and let's measure exactly how bonkers this rally was. 4,000%. So a 40x move. That means if you had put in $1,000 here, it would have been $40,000 at this tippy top. And currently, it would be, your $1,000 would be about $13,000. Not bad. Not bad. Just imagine how long it'll take Bitcoin to do something similar to that. So it looks like a good signal to me. I like the convergence of horizontal support, of support line support, fractal looking thing within the risk metric, within price. The fact that, look, I wanted to point this out with Ethereum. We can have these huge dips, right? In the middle of this bull rally, right? The 2017 rally for Ethereum, we had a 67% dip in the middle of that. And I would venture to guess that Ethereum's liquidity then was probably higher than Hex's is now, which speaks to why instead of 67%, Hex dipped a little more, right? It's only about, I think, $60-70 million of liquidity in the Uniswap pools. Then you have the 0x protocol, hit BTC, just got listed on Poloniex today. So you definitely have more liquidity hanging out there. And you also have sideline liquidity of liquidity providers who, you know, are going to do it at some point, but it's just kind of in hot wallets or whatever. So all I'm saying is we can have these major dips in the middle of rallies, and it doesn't necessarily cancel the bull market, right? I'm just using Ether as an example because it's a blue chip, right? Now, something that's really interesting here that I want to point out is, let me know what you guys think, but what do you call this? What do you call this? A impulse wave? Where you have your first wave, right? If we're talking about Elliott wave analysis, I'm going to rotate here into Elliott wave analysis because I really wanted to touch on this point, right? I'm pretty sure this follows Elliott wave theory. It's not going to be perfect, but this is what you get, right? I think this follows Elliott wave theory because wave 3 is the longest. It's definitely not the shortest. This 4 wave does not cross the top of our 1 wave. And what was the other criteria on Investopedia? Pretty simple. You can go learn this yourself. Wave 2 cannot retrace more than 100% of wave 1. Classic, which just means this wave 2 can't go deeper than this bottom, which clearly it didn't. So awesome. I'm pretty sure you can call this a wave 5 pattern. Reason I bring this up is because in HEX, I believe we could be completing a wave 4 currently. And I might make a whole ass video on this and just touch on that. But let me show you what I'm talking about. Here you have the HEX USDC V1 chart, which gives you the full history from late 2019 when HEX actually launched to current day, right? 2021. It's such a beautiful chart. Sometimes I just marvel at it. Okay, let's get back to business. If we do something similar and grab our Elliott impulse wave, you probably already see it if you're keen, or if you're smart, if you're observant, right? We could be looking at something very similar. Something very similar in terms of, look, this is a classic macro potentially impulse move because HEX is a new coin. So this honestly looks right to me. The reason you might be asking, okay, let me point out this nuance real quick. Reason you might be asking, why don't you, place your bottom of your 2 wave here? You could, but remember the price chart doesn't necessarily capture the value transfer that happened on this day, because if you look at the share price right here, we actually are offset, right? So it's exactly the same shape, it's just offset. Point being, value was lower here technically than here, right? Because at this point people got bonus coins, but it's not shown in the price chart. So that's the logic behind that. It's a fundamental outlier, if you want to call it that. Comment down below if that didn't make any sense whatsoever. But point being, this could be a similar 5-wave pattern to what we've seen in many charts, not only Ether, but I'm just using Ether as an example because it's obviously, it's crypto, so it's more so comparing apples to apples here. But I mean, it fits the criteria where this wave 3 was definitely not the shortest wave whatsoever. If we take measured moves, this wave 1 was basically a nice 100x. It was 116x in about 133 days. The following, and this is conservative because again, it doesn't take into account staking at all, but just for price alone, if you hadn't staked at all, if you never interacted with the HEX contract, you only bought HEX and held it liquid, right? Then this was a 246x move of our wave 3. So it fits the criteria that wave 3 is not the shortest. 246x, kind of a big deal. And this wave 1 was about 116x. So it almost tells us, look, you could be expecting a wave 5 that, again, it must be shorter than wave 3. I mean, technically not, right? It would be rare to see a super long 5 wave, but we could see it. I would more realistically expect something like this where wave 5 is more so along the length of wave 1. Maybe it takes a little longer to play out because we have more liquidity. So instead of 6 months, maybe it takes, a little, well, I guess that's not necessarily true because sure, there's more liquidity, so it's harder to pump, but there are also less coins being created every day. So there's less inflation. So more liquidity, less inflation, onboarding rate of users is different. So you have to take into account a lot of variables to see if you'd have diminishing returns. But recently I've convinced myself that I don't think diminishing returns are coming for a while, just because I definitely think HEX is on the left of the S curve, meaning I mean, we only have like what, 200,000 something holders, 70,000 something stakers, whereas something like Bitcoin is approaching hundreds of millions of users. So remember Metcalfe's law. I'm going to go on a tangent here. That the value of a communications network, which money is free speech is communication. So blockchains are therefore communications network, in my opinion. I mean, it might be factual. It might not even be my opinion. But the value of a communications network is directly proportional to the square of the number of users. Meaning if you 1000x your user base, like HEX can, right? Just showing Bitcoin numbers as examples, hundreds of millions of users versus hundreds of thousands. If you 1000x your user base, you could potentially millionx your price. Where else have we seen a millionx in price? Bitcoin, right? It's actually up 6 millionx in price or more if you decide to count when it was trading beneath a penny on localbitcoins.com. Point being, wave 5, could we have completed a wave 4? Potentially. If not, it could be coming literally any day now, right? This dip back here was like, what, 67%, 68%. Current dip, like I said, closer to 74%. On V1, it shows 70%, but in reality, it was closer to 74%. So again, 70-ish% dips. And if wave 5 is something similar to what wave 1 did on the macro, I mean, what was that, like 116x? It's a lot. If we overlay that, let's just copy paste. That did not work out, lol. Okay, 115x, what would that look like? Gotta make room up here, actually. And how long did it take? 133 days. So let's say it takes 175 days, so it takes a little bit longer. That's saying $17 in May. That's absolutely nuts. If you're more conservative, maybe you're talking a couple dollars in May, right? But what I'm saying is this could be a wave 5 pattern incoming. We could have already seen our wave 3. This 74% dip could have been wave 4, because wave 4s are nasty usually, right? They trick you into thinking it's a bear market, and it's not, right? Just like in Ethereum. Just kidding, not a bear market. We're actually going to run up and do another what, like over here from this 126 bottom, it ran up another 15x, right? 10x from here is $1.50, which is like over here. You see how I start getting at these macro trends. So again, wave 3 can't be the shortest, and it's already not. So sure, wave 5 could just go absolutely berserk and technically be longer than wave 3, which would be, again, bonkers, sending HEX to beyond $50. But at that point, you'd want to sanity check and check against other models like regression rainbow. And does a regression rainbow hit $20 in May? It does, right? And so if we had a large wave 5 100x, we could be hitting $20 in May. I mean, that's a tall order, man. And we don't even have to get there for it to still be a bullish Q1 of 2022. And again, these wave 4s can be nasty. So I'm not saying we already found a bottom, but again, when you zoom in, I've already touched on all of that at the beginning of the video, the double bottom formations and all that. So pretty sure that's all I wanted to touch on in this video. Everything fundamentally is still working as planned, like a charm. We had our highest daily payout per t-share recently at 24 HEX per t-share. It was sadly due to a hack of the community member, just a cautionary tale to never have your seed words, your secret recovery phrase, in digital form. So never have it in your notes in your phone. Never have it in a text file on your computer. Never have it in a Google Note, Evernote, or Google Drive or whatever, in a Google Doc. Never have it in digital form, right? Because that's just asking for trouble, right? So again, back on track. Everything fundamentally for HEX is still working, right? Still getting paid HEX on the daily. Now, just to finish off the video, I guess a little Easter egg if you're still here after 27 minutes is there's some interesting seasonality happening here to that fractal pattern, right? Because we touched on that sort of ABC fractal pattern on price and sort of on the risk metric as well, that little W double bottom formation. But what's interesting to me is that it's playing out in a similar position relative to Q1 of 2021, like Q1 of this year, right? We had our downtrend, we had a little fake out bull trap, which peaked on about day 41 of the quarter, and the current one peaked around day 43 of the quarter, which is kind of interesting. And then Q1 of this year, when it actually bottomed out, it bottomed out day 53 of the quarter, and we're currently on day 54, right? So the local bull trap was 2 days offset. So maybe the current local bottom is also a few days offset, and we see a similar pattern play out, which would mean we could be close to the bottom, right? We've seen a lot of capitulation already, and not saying it can't go lower. I'm always going to hedge my statements, but things are looking very bottomish. I mean, what goes down, I'll let you fill in that sentence, right? And if you're not aware, we added this HEX versus ETH versus BTC on the LookIntoHex.com/HEX BTC chart. And this kind of hints at, look, this is a important time right now in HEX because clearly we're testing red on our regression rainbow. And I'm going to lean towards saying it's going to hold. However, there's a possibility it doesn't. And if it doesn't, we have to rethink our model, right? And I'm not talking about if it like breaks a little bit, rides beneath it, pops back above it. I'm talking about if we form significant, extended, sustained market structure beneath it, like weeks, full candles, weeks, new structure. At that point, that's when we actually have to refit the model, right? That's when I say I'm wrong and that S-curve business, that thesis isn't true, right? It would be really hard to kind of come up with a diminishing returns thesis. I mean, the model would be easy, but kind of the fundamental backing would be tough, because then it's like, well, what if it's just a lull in adoption? And then we make a logarithmic model and then it pops back above it and just starts following this again. So time will tell, right? Just give it time. HEX is 2 years old, right? Ethereum is what, 6-7 years old. Bitcoin's an old man. It's already over 10 years old. Coming up on like 12, 13. So just give it time and time will tell. It's really as simple as that. Historically speaking, those who hold in crypto do the absolute best. And we actually saw on Twitter, the Godwall came out and publicly stated a lot of these things, right? A lot of kind of Richard Hart philosophy, which says just hold, right? Those are the average people who get rich in crypto are those who hold, unless you're like a founder in exchange. So that's pretty much the video I wanted to touch on. Go ahead and check out the new chart, lookintohex.com/HEXBTC. And right, if we hold the regression rainbow, then we're still outperforming these bad boys. If we break beneath it, then we start coming into where these coins are playing around during this point in time. So we'll see. Again, time will tell. I know it's cliche and it doesn't really say much. But yeah, appreciate you watching the video. I know it had been a while. I'll do my due diligence. I really want to make more videos this upcoming month in December. But yeah, I appreciate you watching. Let's blast through 10,000 subs. You guys are nuts with the subs. Blowing up engagement on Twitter. Check it out. If you want exclusive content, lookintohex.com/VIP. We have access to these trading view indicators, weekly update videos. Even when I'm not making public YouTube videos here on the channel, we knock those out weekly over there. Access to not only the regression rainbow indicators, the risk metric, private Telegram group, all that good stuff. Appreciate you watching, and I'll catch you in the next video. Peace.